Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now just a general disclaimer, this video is only for education purpose. Just consult your financial advisor before investing. Now just let us discuss what we have mentioned in our last video. In our last video, we have mentioned that last week was a truncated week as well as a monthly expiry. Last week, we had just three trading sessions. So we were expecting market to move sideways with high volatility, and we have already mentioned that market might move in this particular manner. So most probably on Tuesday, market open on a negative note, and then for 2 days it remained in this particular range. You can see on the half-hour chart or 15-minute charts of last three trading sessions. Exactly, market has behaved on our expected lines. So now let us directly go to the Nifty daily charts. Now this is the Nifty daily charts. You can clearly see it has broken this particular rising channel. On Tuesday, last Tuesday, it has broken the channel. On Wednesday, again, it tried to pierce into the channel. And then on Thursday, which was the last trading week of of last week, and also the last trading day of the settlement, which is the monthly expiry. Now, if we see the highs of Wednesdays and Thursday, the high of Wednesday is 21,482, and the high of Thursday is 21,459. So for next week, the trend deciding level would be 21,483. So the swing traders, those who trades in the Nifty for the huge swings, or from the wave theory point of view, or Dow theory, those who use the Dow theory should wait for Nifty to break 21,483 in Nifty spot, and then one should go long in Nifty for an upside target of almost maybe 21,700 to 21,800 on positional basis. Positional basis maybe for next couple of trading sessions. Now let us go to the Nifty weekly charts. So on the Nifty weekly charts, you can clearly see it is a bearish pattern, but you can see a slightly longer shadow, which has clearly indicated that some sort of buying has also emerged at the lower levels. So most probably we might see Nifty, if it opens flat to positive, then it might consolidate, and then once that reaches that particular trend deciding level, then we might see the extension of rally on the upside. You can on the RSI also, you can clearly see. Let me stretch the RSI. It is still with the negative signals on the daily charts, but if we go on the hourly charts, you can clearly see it has shown some sort of positive divergence, which is a positive sign for the market at this juncture. So most probably, looking at this chart, uh, the trend still remains to be slightly bullish, and once it breaks, Nifty breaks 21,483, then it will become stronger bullish for an upside target of 21,700 to 21,800 in the coming trading sessions. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. So the first support in the Nifty is placed at 21,247. Below that, the second support is placed at 21,137, and below that, the third support is placed at 20,926. Whereas on the upside, the first resistance is placed at 21,483, second resistance is placed at 21,670, and third resistance is placed at 21,750. These are the crucial supports and resistance level in Nifty for the next week. Traders should just try to watch out this level. If any kind of confusion, then one should follow first half an hour to 45 minutes of range. One should mark the highs and lows of first half an hour to 45-minute range, and then trade accordingly in the direction of the breakout. If it breaks the upside range, then one should go long. If it breaks the downside range, then one should go short. But looking at the charts, we feel that the breakout might come on the upside after maybe consolidation for maybe a couple of hours, or maybe 1 or 2 hours. But that we will see on Monday. But this should be the strategy which one should use for trading. Those who wants to take a swing trading for next couple of trading sessions. So friends, now let us discuss the derivative data of Nifty calls. Now here you can see on Nifty calls, the action was seen in 21,400 calls, 21,500, 21,600, 21,700, and up to certain level 21,800 also. Now here you can see there has been a significant drop in the option premium, which means that the smart traders are into writing the are basically into writing the out of the money calls. Now there has been a rise in the open interest, rise in the volume. There has been no shedding seen in this particular options strike prices. The implied volatility is high. It is between 16.10 to 16.97. And in the recent past, we have seen that the IVs, I mean to say the India VIX has also uh, have risen or shot up in a very short span of time. Because of this, we have seen the high implied volatilities in this particular strike prices. So if there is more weakness, then these IVs might go into the danger zone, and then from there onwards, we might see some sort of short covering, and that might propel the Nifty on the upside or push the Nifty on the upside. So as of now, as I said, one should wait for Nifty to break 21,483 in Nifty spot. If it breaks, then we might see a decisive breakout towards the level of 21,700 to 21,800 mark. So friends, now let us discuss the Nifty put data. In Nifty puts, the action was seen in 21,300 puts, 21,200 puts, 21,100 and 21,000 puts at this particular levels. Now you can see the volumes are also rising slowly and gradually. Option premiums are slightly flat to negative, slightly. So there is no sign of put writing seen, but it is flat. The implied volatility of puts are between 13.19 and 14.44. So most probably the Nifty put data is neutral. So we do not see any kind of a buying input also or writing in the put. So definitely now in looking at this particular data, one should wait for Nifty to break uh, 21,300 strike price. Sorry, 21,300 in Nifty spot. If it breaks 21,300 and if it closes below those levels, then there are chances that Nifty might drift down to the levels of 21,000, which is the psychological mark. But as of now, the data seems to be slightly positive. One needs to wait for Nifty to break the trend deciding level. So friends, now let us discuss the Bank Nifty daily charts. Now this is the Bank Nifty daily charts. You can clearly see Bank Nifty has been hovering into a falling channel. Now here the most important thing which I would like to highlight is this particular long-term moving average, the red line, which is the 200-day moving average. Last two trading sessions, Bank Nifty has strongly defended 200-day moving average. So purely on the basis of this 200-day moving average support, I strongly believe that we might see Bank Nifty might outperform Nifty in the next week, which is what this is showing, because 200-day moving average is a strong long-term moving average. And let me show you the charts. Whenever Bank Nifty has tested or pierced 200-day moving average, after consolidating, it has moved sharply after testing those levels. So you can see during this particular 19 July 2022, I am putting my cursor. If you can see there, after taking resistance, it has a decisive breakout about those level, and then it has rallied. Again, it has tested 100-day moving average, but defended 200-day moving average. Then we have seen a sharp rally. Again, in March 2023, it has just pierced below 200-day moving average. Again, it managed to close above those level, and it has rallied sharply. Again, on 30th October, almost it has pierced. Then slowly and gradually, it has tested those levels, broken 200-day moving average on the upside, and it has rallied. So again, this is the multiple time it has again entered this level. So looking at this purely on this technical data, we feel that, or I feel that Bank Nifty might give a surprising move on the upside in the coming trading sessions. So looking at this data, it seems to be positive. And again on Thursday, it has formed a hammer. You can see a red hammer, so which is a bullish sign. So definitely, Bank Nifty is looking positive at this juncture. But only negative thing is RSI on the daily charts. So let us go on the hourly charts, how the RSI is performing. So clearly RSI has given a positive divergence. Again, this is a positive sign for the Bank Nifty on the hourly charts. So definitely the Bank Nifty is looking positive at this juncture, purely from the point of view of 200-day moving average support and hourly positive divergence on RSI. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. First support in the Bank Nifty is placed at 44,429. Below that, the second support is placed at 44,254. And below that, the third support is placed at 43,880. Whereas on the upside, the first resistance is placed at 45,139. Second resistance is placed at 45,485. And third resistance in Bank Nifty is placed at 46,249. So these are the crucial supports and resistance level in Bank Nifty. Again, one should follow the first half an hour to 45 minutes rule, high and low range. If it breaks, then one should trade in that particular range of breakout. I believe the breakout might come on the upside, so any dips should be used as a buying opportunity, should be the strategy for traders for next trading week. So friends, now let us discuss the option data and let us see what we have seen or what we have observed on the Bank Nifty call data. In Bank Nifty calls, the action was seen in 45,000 calls, 45,500 calls, and 46,000 calls. Now, here again, the most important thing we have seen that there has been a significant drop in option premiums. Again, most important thing is the implied volatility. Implied volatility is already in the danger zone. It is between 19.87 and 22.01. So already the smart money is heavily into writing the out of the money calls. That was the reason we have seen a significant drop in the option premium. But looking at the hammer formation of the Bank Nifty daily charts of Thursday's candle, we feel that the IVs are already in the danger zone. We might see a sharp short covering in this Bank Nifty calls because smart money is already into writing the out of the money calls purely on the basis of higher IVs and significant drop in option premium. So once Bank Nifty crosses 45,000, those who are short in Bank Nifty should definitely exit from short, should go long because Bank Nifty might give a sharp short covering rally towards the level of 46,000 in next coming trading sessions. There has been a rise in the volumes, rise in the open interest. So definitely, as of now, the data seems to be negative because the IVs uh, and the option premiums are significantly uh, weak. But as I said, IVs are in danger zone. We might see a sharp short covering rally in this particular strike prices, which will push the Bank Nifty on the upside and in a very what we call as a sharp manner. So one should be highly cautious. Those who are short, one should try to book profits. Those who are gaining in Bank Nifty short options, so definitely one should avoid going negative or have a negative view in Bank Nifty. Now friends, let us discuss the Bank Nifty put data. In Bank Nifty put also you can see there has been a drop in the option premium, but that is not that much significant. So there has been a slightly writing of Bank Nifty puts, but that is a positive sign. Now here the implied volatility is also between 12.87 and 15.78. It is slightly in comfort zone. But if Bank Nifty opens with a negative gap or a week, then this IVs uh, might again come down, and then we might see some sort of rally if Bank Nifty starts uh, uh, inching higher. There has been a rise in the volumes. Open interest is also rising. There has been no shedding in any particular strike prices, which we are seeing on the screen. So definitely, yes, there has been a slight writing of the puts, but that is not that much stronger as compared to writing calls. But the calls are in danger at this juncture. Looking at the implied volatility of Bank Nifty calls, Bank Nifty put might go deeper or might be what we call as inviting the smart trader to shift from writing Bank Nifty calls to writing Bank Nifty puts, which will propel Bank Nifty to scale higher from this particular juncture. So, friends, now let us come to the final segment of our show, which is positional call. And the name of the stock is Jindal JSW Steel. The stock has been hovering in a falling channel. On Thursday, it has taken an attempt to break this particular falling channel, but it failed to do so. The volume were on the rise. The stock has formed some kind of long-legged doji or dragonfly doji or what we call as a gravestone doji. If it breaks Thursday's high, then stock might give a decent return in the short to medium term. Short to medium term, that I would consider it as maybe in next 3 to 4 months. RSI is positive in from the comfort zone. The most important thing is JSW Steel has given us very phenomenal numbers. The quarterly numbers were great. The quarterly numbers were very good, and definitely this will be impacting the stock prices, and stock is on the verge of a falling channel breakout. So swing traders, positional traders, investors can what we say that accumulate the stock in the range of 818 or 816 and on dips to 800 for an upside target of 895 or 96, or round figure can take it 900 in short to medium term. Short to medium term means maybe for next 3 to 4 months. So this stock for an investment is also looking good. So traders or investors should watch out this stock. So thank you, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you very much.